Aaron Dillon here, Managing Director of AG Dillon & Co. Before we jump in, a quick thank you to our wealth management partners. AG Dillon closed 6 pre-IPO stock funds on March 7, 2025. We're making investments into Anduril, OpenAI, XAI, Grok, Figure AI, and a space economy company in this recently closed offering and raised a record $30 million with 33 RAs and IBDs participating. It's just a great result. AG Dillon assets under management now stands at $93 million in just under 2 years since we closed our first fund. If you're a financial advisor and would like to use our single stock funds to build bespoke pre-IPO stock portfolios, please drop us an email. You select the pre-IPO stock company exposures and weight allocation to each pre-IPO stock to express your unique investment thesis. Our funds are available for purchase at Charles Schwab, Fidelity, and directly at AG Dillon Funds. $2,500 minimum investment. Email aaron.dillon@agdillon.com to invest. And again, that is Aaron, AARON, Dillon, DILLON, at agdillon.com to invest. Now for the pre-IPO stock market update. I missed last week, so we'll cover the weeks ending February 28 and March 7 today. CoreWeave, an AI cloud computing provider, is preparing for a highly anticipated IPO in the US, aiming to raise $4 billion at a valuation exceeding $35 billion. The company reported explosive growth with 2024 revenue of $1.92 billion, up 737% year over year from $229 million in 2023, and $15.8 million in 2022. Gross margins reached 74% in 2024, reflecting the profitability of GPU-based compute services. However, operating margins stood at 17% due to heavy infrastructure costs, with net losses widening to $863 million in 2024. That's 45% of revenue, up from $594 million in 2023. CoreWeave operates 32 data centers with over 250,000 GPUs and holds $15.1 billion in remaining performance obligations, or RPOs. So that's contracted future revenue that is yet to be recognized on their financial statements. As of December 2024, with a weighted average contract length of 4 years. CoreWeave generated $1.2 billion in adjusted EBITDA, that's 64% margin in 2024, despite reporting negative operating free cash flow of negative $6 billion due to heavy capital expenditure for infrastructure build-out. CoreWeave's financial statements are complex, with $13 billion in debt tied to GPU infrastructure-backed lending. It raised a $650 million credit facility led by JP Morgan and Goldman Sachs and Morgan Stanley in October of 2024. Microsoft accounted for 62% of CoreWeave's 2024 revenue, highlighting customer concentration risk. CoreWeave's largest backers include Cisco, NVIDIA, Magnastar Capital, and Coatue Management, Jane Street, and Fidelity. The company is also acquiring Weights and Balances, which is an AI company, for $1.7 billion. So it's expanding its AI software capabilities beyond cloud infrastructure. CoreWeave's IPO marks the first major AI-related public offering, positioning it as an AI hyperscaler. The company's strategy involves leveraging NVIDIA's GPU technology paired with their unique expertise to build out, manage, and efficiently run GPU data centers at maximum utility to meet AI-driven demand. CoreWeave had a $23 billion secondary market valuation prior to the IPO announcement. At a $35 billion IPO, that's a 52% increase. So I'm rooting for CoreWeave. I hope they have a big, smooth IPO with a massive pop in the public market, and we'll be keeping an eye on this one. Stripe, the online payments processor, announced a tender offer valuing the company at $91.5 billion, close to its peak valuation of $95 billion in 2021 and significantly higher than the $50 billion low in March of 2023. The offering allows employees and shareholders to cash out shares, with Stripe raising funds from investors to support the deal. In 2024, Stripe processed $1.4 trillion in total payment volume, up 38% year over year, trailing slightly behind PayPal's $1.68 trillion. Stripe reported profitability in 2024 and expects to remain profitable in 2025, reinvesting profits into R&D. Over 700 AI startups launched on Stripe last year, including major clients like OpenAI, Anthropic, Perplexity, and Mistral, fueling growth tied to AI boom. Stripe has started to regularly conduct tender offers to provide liquidity for early investors and employees. In a recent interview, Stripe CEO Patrick Collison stated that the company has no intention to go public and would prefer to remain a private company. So Stripe has a $90 billion valuation in secondary market. So the $95 billion tender valuation is a 6% pop versus the secondary market. OpenAI, the AI large language model platform, is shifting its strategic alliance from Microsoft, its biggest shareholder, to SoftBank, which is set to become a major financial backer. OpenAI is raising $40 billion with $25 billion coming from SoftBank, which will value the company at $300 billion. Nearly half the funds will go towards Stargate, a joint venture between OpenAI, SoftBank, and Oracle to build AI data centers in the US over the next 3 years. OpenAI's spending on Microsoft-owned data centers will more than double from $13 billion in 2024 to $28 billion in 2028. But by 2030, Stargate will supply 75% of OpenAI's compute power. OpenAI expects to have 8 gigawatts of data center power by 2030, including 1 gigawatt from its Texas-based Stargate Center and contracts for an additional 2 gigawatts of power. OpenAI forecasts its revenue will more than triple in 2025, growing from $3.7 billion in 2024 to $12.5 billion. The revenue is projected to hit $28 billion by 2026, with most coming from ChatGPT and the rest from developer tools and AI agents. SoftBank is expected to account for 1/3 of OpenAI's revenue growth this year by deploying OpenAI tools across its companies. OpenAI's user base also surged, with weekly active users climbing 33% from 300 million in December 2024 to 400 million by February 2025. OpenAI now has 2 million paying enterprise users, double the figure from September 2024. Cash burn is expected to grow from $2 billion last year to $7 billion this year, peaking at $20 billion in 2027 before OpenAI becomes profitable by 2030. The company anticipates total compute costs of $320 billion between 2025 and 2030, with annual spending on model training reaching $40 billion by 2028. OpenAI is advancing its technology, rolling out GPT 4.5 and preparing to launch GPT-5. ChatGPT usage is growing rapidly, with developer traffic up 5x since the launch of OpenAI's O3 mini model. The company aims to simplify user experience by merging its GPT and O series models into a single platform. The company announced an AI agent product will be launching soon with a fee of $2,000 to $20,000 per month. Okay, that's a lot. Based on the level of agent sophistication, the logic is that the AI agent can replace employees, human employees, that is being paid $100,000 or more per year. The company has a $304 billion secondary market valuation. That's up 1.3% versus this $300 billion round that's currently happening right now. X, or Twitter, the social media platform, is in talks to raise funding at $44 billion valuation, matching the price that Elon Musk paid for Twitter over 2 years ago. The funds will be used for expanding payment and video products and paying down a part of the company's $13 billion debt. A recent $4.74 billion debt offering led by Morgan Stanley was sold at face value, leaving banks with about $1 billion of X's debt. Fidelity Investments had previously marked down its Twitter stake by 70% from the 2022 sale price. X's earnings and revenue appear to have stabilized, supported by increased advertising around the U.S. election. Musk's AI startup XAI, is also seeking to raise funds at a valuation of $75 billion, with X holding a $6 billion stake. So I believe that this XAI round will close higher versus the $75 billion, so that X stake could be more than the $6 billion kind of disclosed. Investors in Musk's original acquisition include Andreessen Horowitz, Sequoia Capital, and the Qatar Investment Authority. Thinking Machines Lab, an AI company founded by former OpenAI CTO Mira Murati, is seeking to raise $1 billion at a valuation of around $9 billion. The company is pre-revenue. Thinking Machines, structured as a public benefit corporation to balance societal impact with profit, was launched after Murati's departure from OpenAI in September of 2024. Several key OpenAI alumni, including co-founder John Schulman and researchers Barrett Zoff and Luke Metz, have joined the company. The terms of the deal have not yet been finalized and may change. Jamie Donaldson is seeking to raise a few $100 million for his MrBeast media business and a funding round that will value the company at $5 billion. MrBeast, which generated over $400 million in sales last year, owns or holds stake in several businesses, including Feastables, which is a snack company, Lunchly, another snack brand, and a video production company. MrBeast Amazon Prime show, Beast Games, which cost over $100 million to produce, was Amazon's most watched unscripted series ever. But he admitted to losing tens of millions of dollars on production. Amazon is committed to over $250 million for 2 more seasons. MrBeast has previously raised capital from Alpha Wave Global. Shein, the Singaporean Chinese fast fashion business, has net profit fell 40% to $1 billion in 2024, down sharply from its earlier projections of $4.8 billion. Ouch. Sales grew 19% to $38 billion, but also below the initial forecast of $45 billion. The company is planning an IPO in the London Stock Exchange, but reports suggest it may cut its valuation by nearly 25% to around $50 billion, with Bloomberg indicating it could drop as low as $30 billion. Shein's London listing may be delayed due to the second half of 2025 after President Trump moved to end a tax exemption that could increase its prices and reduce profitability in the US, which is one of its key markets. SpaceX's Starlink, a satellite internet company, has become Nigeria's second largest internet service provider, or ISP, by subscriber count as of Q3 2024, with 65,000 active customers, surpassing Fiber One, which fell to third place with 33,000 subscribers. Starlink's subscriber base grew by 41,000 from 23,000 in December 2023, reflecting a growth rate of over 174% in just 9 months. SpectraNet retained the top spot in Nigeria with 105,000 active customers, despite losing over 8,000 subscribers since December 2023. Starlink's rapid rise came despite higher costs, with monthly subscription fees jumping from $25 to $50 in December 2024, following a dispute with the Nigerian Communications Commission over unapproved price hikes. Demand has been so high that Starlink had to suspend new orders in Lagos, Abuja, Port Harcourt, Benin City, and Warri due to reaching capacity. Nigeria's ISP market includes 241 licensed providers, but only 124 have active customers, collectively serving 307,000 customers in total. It's a small figure compared to the 132 million active internet subscriptions from Nigeria's 4 mobile network operators. So mobile phones are big in Nigeria versus kind of landline Wi-Fi. Basically, no one in Nigeria can get home Wi-Fi or home or business Wi-Fi, and I assume no wire infrastructure to the physical location. So naturally, Starlink is going to dominate, as they do not require any wire or cable infrastructure. It's all satellite-based. Globally, Starlink has over 5 million customers as of early 2025, up from 4.6 million in December of 2024 and 3 million in May of 2024, adding an average of 6,780 new customers per day over the last 2 months. SpaceX has produced around 15,000 Starlink dishes per day, or about 70,000 per week, translating to a production run rate of 3.5 million dishes annually. The Bastrop, Texas production facility is being expanded to accommodate more demand, and SpaceX plans to have 10 million Starlink customers by the end of 2025. Starlink is currently available in 19 of 54 African countries, with more than 15 new markets openings planned in 2025. Its success in Nigeria reflects the broader trend of high demand for satellite-based internet in underserved markets. Starlink generated $9 billion of revenue from its satellite internet business in 2024. SpaceX projects Starlink's revenue to grow to $24 billion by 2026. Starlink's product range includes premium kits, maritime kits, which is 3% of production, business units, which is 5% production, and mobility and roaming units, which is 25% of total production, indicating a significant diversification in its offerings. SpaceX has a $389 billion secondary market valuation. That's up 12% versus its December 2024 round. Unitree Robotics, led by 34-year-old Wang Xingxing, has quickly risen to prominence in China's robotics sector, drawing attention from Chinese President Xi Jinping and global tech giants. Founded in 2016, Unitree's affordable robots have gained traction globally, with its 4-legged Go 2 priced at $2,800, significantly cheaper than Boston Dynamics' rival product at $74,500. The company launched its first humanoid robot in 2023 with its latest model, the G1, sells for $16,000. That's lower than the estimated $20,000 to $30,000 price for Tesla's Optimus. Backed by Meishuan and Source Code Capital, Unitree's cost-effective approach has positioned it as a key player in the rapidly growing Chinese robotics industry. Wang's vision is to deploy humanoid robotics widely by 2026 or 2027 for service and manufacturing sectors. Unitree's influence extends beyond China, with Meta Platforms discussing collaboration and Carnegie Mellon University featuring its robots in performance research. Wang started building robots while studying at Shanghai University between 2013 and 2015 and founded Unitree shortly after. The company's global reach is driven by its low cost and high performance model, which Wang credits to its focus on profitability and cost efficiency. The robotics industry in China is expected to grow rapidly, fueled by AI, demographic shifts, and the drive for efficiency. So we really like the humanoid robotics as an emerging technology trend. There are several US-based companies we are tracking, but China has 6 or 7 humanoid robotics companies that are as good or better, in our opinion. So my take is this is happening. We're going to have humanoid robots in our homes by 2030 or sooner. So this is a very interesting opportunity for investors. ByteDance, the Chinese technology company, valuation has surged past the $400 billion mark, according to major investors, marking its a significant recovery from its low point of $275 billion in July of 2022. SoftBank's Vision Fund valued the TikTok owner at over $400 billion in December, with Fidelity and T. Rowe Price marking it at $410 billion and $450 billion, respectively, based on November 2024 filings with the SEC. This increase reflects ByteDance's strong revenue growth and the success of its AI platform, Daobao, which has 75 million regular active users. However, ByteDance's U.S. operations are valued at zero in SoftBank's calculations due to the ongoing threat of a TikTok ban in the U.S. Despite this, geopolitical uncertainty hasn't deterred investor confidence, with some buyers, still seeking to acquire ByteDance stock at levels as low as $240 billion, though few sellers are willing to accept that price now. President Trump has recently said that he would probably extend the TikTok ban deadline again if a deal isn't reached by April 5. ByteDance has also announced an internal employee stock buyback, which values the company at around $315 billion, up from the $300 billion valuation in its 2023 buyback. The latest offer sets the price at $190 per share for current employees and $161 per share for former employees, reflecting a 5% to 6% increase from its previous buyback in September of 2024, when shares were priced at $181 and $154 respectively. This is a notable gap from the Fidelity and T. Rowe Price valuation levels, which are about 30 to 40% higher versus the employee buyback valuation. ByteDance's AI strength remains a key driver of valuation growth, with its vision understanding model costing 85% less than the industry average. TikTok's potential ban remains a looming risk if the app avoids being shut down in the US. ByteDance's valuation could rise significantly higher. The company's IPO remains indefinitely on hold due to US-China tensions, but the valuation rebound signals growing confidence in its long-term prospects. We're putting the company's valuation at $315 billion now, as there is some secondary market activity happening below the Fidelity, T. Rowe Price, and SoftBank $400 billion plus number. Ramp, the online business banking company, has reached a $13 billion valuation after selling $150 million in employee and early investor shares, marking a sharp recovery from its $5.8 billion down round in 2023 and surpassing its previous $8.1 billion peak in 2022. Founded less than 6 years ago, Ramp now serves over 30,000 businesses and processes over $55 billion in annualized purchase volume, up from $10 billion in January of 2023. The company has saved businesses over $2 billion and 20 million plus hours, more than half of those savings in the last 12 months alone. Buyers include Coastal Ventures, Thrive Capital, General Catalyst, GIC, and Stripes. Ramp generates revenue from interchange fees and higher margin software subscriptions, burned less than $2 million per month last year. While CEO Eric Glyman said that there's no immediate IPO timeline, he acknowledged it's under consideration as Ramp focuses on enterprise expansion and cost cutting for clients. Ilya Sutskever, new AI company Safe Superintelligence, has raised $2 million in funding at a staggering $30 billion valuation, a six-fold jump from its $5 billion valuation in September 2024. The funding, led by Green Oaks Capital and with participation from Sequoia Capital and Andreessen Horowitz, makes SSI one of the most valuable AI startups globally, despite employing just 20 staff. That's a fraction of OpenAI and Anthropic's workforce. SSI operates in secrecy with job candidates even required to leave phones in a Faraday cage before entering the office. Sutskever, a co-founder and former chief scientist at OpenAI, left the company in early 2024. Unlike OpenAI and Google, which generate revenue from AI products, SSI won't release any products until it achieves superintelligence, AI that can outperform experts in nearly every field. Sutskever's vision for safe, quote-unquote, safe AGI aims to avoid tensions between research and product development that plagued OpenAI, positioning SSI as a high-risk, high-reward bet in the AI arms race. Plaid, the bank compliance fintech, is in talks to arrange a secondary share sale at $6 billion valuation, down sharply from its $13.4 billion valuation when it last raised funds in 2021. The sale, led by Franklin Templeton and arranged by Goldman Sachs, reflects a significant reset in Plaid's market value despite strong revenue growth. The company ended last year with about $400 million in annual recurring revenue, up more than 25% from the previous year. Terms of the deal are still subject to change as discussions continue. Plaid has a $4.8 billion secondary market valuation, so the $6 billion valuation for this trade is a 25% markup versus its current trading level. Scale AI, an AI infrastructure company, has secured a multi-million dollar contract with the U.S. Department of Defense for ThunderForge, the DoD's flagship AI agent program designed to enhance military planning and operations. The contract, managed by Defense Innovation Unit, will involve global tech partners, including Microsoft and Anduril, to develop AI agents for modeling, simulation, and decision-making support. ThunderForge will roll out first at the U.S. Indo-Pacific Command and the U.S. European Command before expanding. Scale AI, which supplies training data to OpenAI, Google, Microsoft, and Meta, booked a $13.8 billion primary round last year, raising $1.1 billion. The deal reflects a broader shift in tech's stance on military AI use. OpenAI, Anthropic, and Palantir have recently partnered with defense agencies despite previous bans on military applications. Scale AI CEO Alexander Wang emphasized the program's focus on machine speed to enable faster decision-making in modern warfare. Scale AI has a $14.5 billion secondary market valuation, is up 5% versus May 2024 round previously mentioned. Epirus, the AI-focused defense contractor, has raised $250 million in a Series D funding round to hyperscale production of Unitree, its high-powered microwave counter-electronics system designed for modern warfare. The company's Series C in 2022 valued the company at $1.35 billion, and the current round was disclosed to be over $1 billion, which I assume means that this current round is a slight down or flat. Leonidas delivers unmatched counter-swarm capabilities using solid-state software-defined technology to neutralize low-cost network electronic threats at scale. So basically, drones are coming at you, and this thing knocks out all the drones, the drone swarm. The system features an open architecture and unlimited magazine and demonstrated non-kinetic effects against a range of electronic threats. The funding will enable Epirus to expand its manufacturing and innovation footprint in the U.S., strengthen its supply chain and improve internal systems, and grow its international and commercial presence. The company aims to shift from a one-to-one defense model to a one-to-many approach, reflecting the changing nature of battlefield threats. Klarna, the buy now, pay later and payments company, is seeking to raise at least $1 billion in a U.S. IPO, targeting a valuation of over $15 billion on the New York Stock Exchange in early April. The company, founded 20 years ago in Stockholm, Sweden, peaked at a valuation of $45.6 billion in 2021 before plunging to $6.7 billion in 2022. Last year, analysts valued it at around $14.6 billion based on shareholder estimates. Klarna serves 85 million customers and partners with 600,000 retailers globally. The IPO, led by Goldman Sachs, JP Morgan, and Morgan Stanley, involves around 15 banks. Klarna has been restructuring ahead of the IPO, selling its checkout business for $520 million and acquiring Laybuy in New Zealand. The Sequoia-backed firm aims to expand into cryptocurrency, with CEO Sebastian Siemiatkowski announcing Klarna will embrace crypto. Klarna has a $10.6 billion secondary market valuation, so a $15 billion IPO would be a 42% pop for its private market investors. Discord, the social messaging app, is in early talks with bankers about an IPO that could happen as early as 2025, according to the New York Times. The company has not yet confirmed the plans, but has been on a IPO watch list alongside fintech company Chime. Discord, valued at around $15 billion in its last primary round in 2021, has 150 million monthly active users and generates annual revenue exceeding $500 million from subscriptions and premium features. Discord has a $5.6 billion secondary market valuation. That's down 62% versus its September 2021 round. Okay, that's it for this week. Thanks, and see you guys next week.